Great news coming out of K Street. The Biden administration targets lower middle income earners with $600 IRS reporting requirements. Sounds fantastic. I did a talk on this a while back about that so-called bipartisan bill that passed. Well, some little hidden gems in it. So as of January 2023, ladies and gentlemen, the Biden administration requires Americans to report to the IRS all business transactions using third-party payments, Venmo, PayPal, for goods or services over $600, thanks to a provision hidden in the Democratic partisan $2 trillion stimulus bill from March. God, it sounds fabulous. So just some interesting little tidbits how this kind of changed. So the new reporting requirements will ensure everyone who sells, a flashlight, a couch, or pays a babysitter electronically could trigger further IRS scrutiny. What about those 900 billionaires? That's initially what Joe Biden said he was going to do. So this does violate Joe Biden's own promise that greater tax enforcement wouldn't hit lower or middle income Americans. He said he was going after the billionaires. Not so fast, ladies and gentlemen. President Biden is still demanding $80 billion in spending for an army of auditors to, turn local banks into chapters of the IRS and increase audits for, everyday Americans with a job. You make $34,000 a year, going to get every cent of that. So here's what you need to know. The $600 threshold reporting, third-party payments. Companies will have to file a 1099-KS on a yearly basis to report third-party payments and send copies to both the taxpayers and the IRS. So you side hustlers who get paid via Cash Apps, Venmo, risk being audited if you don't report the income. The companies will get audited. So you're going to have to report those earnings. In 2021, Congress dropped the reporting threshold. Initially was 200 transactions worth a total of $20,000 down to just one transaction, 600, as part of the American Rescue Plan CNBC reporting. That threshold will likely have implications for regular users, absolutely, for the Venmo and the PayPal apps and other apps. This was followed by a heated backlash on the other side. Republicans and banks, a lot of banks across the country were upset, so there were talks of, kind of working something out with the banks. It was a little arduous, because, banks have to report data on accounts now, and they're going to allow certain exemptions. So maybe they're going to raise that 600. And that's the reason I'm doing this talk, because it looked like they were going to change it. So, from the previous special of 600, and several states and Republicans and banks were criticizing as an invasion of privacy. Well, it looks like in the last week, folks, they changed their minds and they're keeping it at 600. So, remember Joe Biden administration, the new rules intended to, compel American workers to pay their fair share. An initial idea that Biden pushed for the wealthy, the billionaires. He said, we're going after the billionaires that make, the 1,000 or less billionaires, not the average American. But that's until now, ladies and gentlemen. Interesting. Kind of the same situation with the college tuition monies. I don't know. It gives me a little heartburn, So let's look at the highlights of this just real quick. According to the agency, the third-party payment app will send each individual a 1099-K by January 31st for the income received in their prior calendar year. So the specific rule states for all payment card transactions, that includes debit, credit, stored value cards. In number 2, in the settlement of third-party payment network transactions above the minimum reporting thresholds as follows. So for returns for the calendar years prior to 2022, number 2, gross payments that exceed $20,000. Number 3, more than 200 such transactions, and for returns for the calendar years after 2021. So gross payments for goods or services that exceed 600, and that's any number of transactions. So the new tax filing rule is joined by Biden's increased funding of the IRS to enforce the $600 threshold. That's why they need all these agents, In 2022, Biden signed the Inflation Reduction Act, which, funds 87,000 additional IRS agents. Roughly, ladies and gentlemen, over 1,200 per state, if you break it down. So the Joint Committee on Taxation estimates that going after the little guy and the little gal who have no money and can barely pay their bills right now will raise $8.4 billion over 10 years, the outlet noted, which they can use for more wars and more guns and weapons. Companies file 1099 on a yearly basis, report the third-party payments, send the copies to both the taxpayers and the IRS. Accordingly, many individuals will likely receive a 1099-K by accident. This was interesting over taxable personal transactions. Those pencils you bought, those staples for your small business. Should that occur, I'll put this in the description. The IRS advises taxpayers to, contact the company to fix the error. And just another problem that's going to be a mess. Should they fail to do so, you're going to have to file a correct tax return and provide a written explanation to the agency. From researching this, a frequently asked questions page from the IRS says that you should receive the Form 1099-K for personal transfers, such as reimbursements for, if you split meals, gifts, allowances. However, if you receive the form for personal transactions, you're going to have to contact the issuer for a correction. If the company doesn't fix the error, you're going to have to attach an explanation to your tax return while reporting your income correctly. That's directly from the IRS. I just went through some comments and research I was doing. It was interesting to see what comments were in all these articles over the internet and major outlets. Stuart Matthews, glad this was made a priority. $600 transactions are are perfect for America. Far worse and far more impactful than Wall Street and corporate corruption. Let's be honest, it has nothing to do with tax. It is a way for the government to track transactions for the data. That's from Stuart. Mike Hathaway, CEO, undercover. He said, on the surface, it seems to make sense for reporting and tracking purposes. But from a fraud analytic perspective, it will only force bad actors to revert to old school methods by using cash for those unsavory, under-the-table transactions, which only little people do, by the way, which are difficult to uncover. This will be a challenge, to fraud examiners because the digital footprint will be lost. On the other hand, I have a feeling tax revenues will increase. And what will they do with that tax revenue? Thanks for sharing, Chief. Eric said the lawmakers' message is clear. Steal more so companies can be reimbursed by claiming a loss. Interesting, Eric. But do not, sell anything that might compete against a company to reduce inflation. Very interesting. The law changes are a direct result of high-end companies, he's saying handbags, clothing, what have you, wanting to maintain resale rights of products that American consumers legally purchased. Furthermore, these companies are so desperate to prevent reselling of their goods that they sponsored laws in California allowing theft up to $970. You're not going to get arrested. The little slap on the wrist, resulting in a mass exit of companies, including food stores and possible mass starvation. It's legal to steal a higher amount, $970 down to $600, without paying tax on the stolen goods, while making it more complicated to get some money back on a legally purchased item that resell it without a receipt. So, bottom line, fewer competition equals higher prices. It's interesting times to be alive, but the bottom line is the Biden administration said they were going to initially, after this backlash, we're going to keep the threshold, which I think is an appropriate threshold, the higher threshold, because, they initially said, which is true. I mean, let's be honest, the billionaires have an army of lawyers and accountants, and there's loopholes and ways to get out of paying tax, and maybe some more scrutiny needs to be there, and that's what the Biden administration said they were initially going to do with this bill, but then they curtailed it down to $600. And how's that going to help? You're squeezing people even more that don't make much money, under $100,000, and there's not much wiggle room there anyway. I mean, you're paying your babysitter, you're paying for your haircut. I mean, I think it's a little excessive. I'm all in favor of the IRS. They have an important job. There's a lot of craziness going on out there, but I think it's at the higher level, and I'll leave it at that. But they initially said it was going to be for the wealthy, and just like the college tuition, now it's changed, and you're gonna be spending more money for government employees on IRS agents, $87,000, $1,200 a state to $1,300 to go after $600. Look at $600 transactions or less, or $600 or more, a little more. So there is things going on with corruption, and I'm all for that and watching for that. Seems a little excessive. Take care, be kind, and life's a pain in the ass. Be nice to people. I'm telling you. Take care.